Good afternoon, everyone. Today is June 13th. This is Hodlcast episode 19. I'm Sasha Hodder, and this evening, I've been asked to present at a mini investment advisors conference where they're learning about cryptocurrency and whether or not they should be providing it as another option for their clients. And they just asked me to come kind of give a little bit of a regulatory overview of the cryptocurrency environment. So I thought I'd practice my presentation by making it a podcast. So I'm going to share my screen here. Okay, so this is what my presentation will be. So the title of the whole thing is going to be Bitcoin investment opportunity or not. And I'll be going after the initial investment advisor and before a Bitcoin CPA who will be going over the tax side of Bitcoin investing. So, a little overview of who I am. So, impassioned with cryptocurrency, former Series 7 licensed trader, and a lot of experience with banks and mutual funds. Right before going to law school, I was working as vice president of sales for NEI Investments. And my legal journey, my journey with Bitcoin began in 2014 as a compliance officer. And my legal practice areas include the Bank Secrecy Act, the Anti-Money Laundering and Know Your Customer regulations, FinCEN compliance, initial coin offerings, and traditional securities law, as well as any kind of contractual drafting. And I do strive to provide my clients a high level of professional services and solutions they trust. And my education, I got my law degree from Florida Coastal School of Law in 2017, a master's of business administration from the Wilfrid Laurier School of Business and Economics in 2010, and a bachelor of commerce from the University of Western Ontario in 2005. And so the agenda for today, we're going to look at who actually regulates crypto, what the ICO environment is, what kind of enforcement actions have taken place already, what the path forward is, and some Q&A. But I don't anticipate any Q&A on the podcast version. Who regulates crypto? This is a kind of a good question. I put on here, one of Crypto Graffiti's stickers, the United Nodes of Bitcoin, and no Federal Reserve, no leader. And that's kind of true for Bitcoin. It was created by Satoshi Nakamoto in 2009, and it's governed by all the nodes that run it around the world. And then I also put the meme, the government trying to ban Bitcoin, and anyone listening on the audio, it's a little tiny fence and one guy feeling, trapped by the fence when he could just walk around it. And that's kind of, Bitcoin is very tough for anyone to regulate because it's international, and it's not something that anyone, if you're doing it right, if you're holding your own private key, it can never be seized from you. No one has to know how much you have. It can be anonymous. If you're holding it on exchanges or you're using other tokens besides Bitcoin, then we do get into some regulation. And so I put the 4 three-letter organizations in America that do govern the space. So the CFTC is who has, they've stated that they have regulatory control over Bitcoin as a commodity. And I believe that, if it was going to be regulated by someone, that's the best one. We have, Mr. Giancarlo, who has made some fairly positive statements about Bitcoin. He lets the CFTC traders, they can trade in Bitcoin at work as of a couple months ago. And so it's regulated like gold or silver. And the main things they go after is fraud. So market manipulation and things like that would be something in their domain. And I believe, and it's not, it hasn't been clearly defined, but I believe any coin that's generated from mining would also be given the same classification, that it would be a commodity. And then the SEC comes into play when the coin is generated from an initial coin offering. And they've said that because an initial coin offering, and I'm going to get into this later, but because it creates an investment contract, that is then a security. So it would be under the securities rules. And then the IRS has come out in 2014 and said that Bitcoin is property, or to be taxed like property. So a capital gain would be, if you hold your Bitcoin for over a year, you have to report any gain when you sell it to the IRS. So the same way that stocks are taxed identically, that's how Bitcoin or any other virtual currencies are taxed. And they do have the right to do that, the IRS. How that applies practically is another story, because if people are owning Bitcoin anonymously, as in they have never put it on an exchange, then there's not really a way to link the owner to that Bitcoin. So them paying taxes would be on the honor system. However, if you have held your Bitcoin on an exchange where you've put in your identity information, then the IRS would know that that's your Bitcoin and certainly would expect your taxes to be paid on that. And then the Financial Crimes Enforcement Network, they govern any kind of money transmission, and their main goal is to stop terrorist funding and money laundering. So they govern things like Bitcoin ATM machines or any exchanges requiring SAR reports, suspicious activity reports to be filed and whatnot. And the penalties from the latter three of those all can be pretty serious if you don't follow the regulations on it. That's who governs it. And then we'll take a look at the ICO environment. So as of the date of this image here, which is a bunch of circles with the various amounts that each ICO has raised, and it's actually a little outdated, but I thought it was the nicest image I could find. It says that there's been over 6 billion raised in ICOs, and that wouldn't include EOS's ICO, which also raised 3.2 billion in 2018. Well, it was kind of a year-long ICO. But on here, it's listed at 200 million at that time. So they've brought in a lot more money since then. And then we have other big ICOs like the Petro coin in Venezuela, and Telegram did an ICO for, I think it was 1.7 billion. So yeah, a lot of money has been raised through ICOs. And for anyone listening that doesn't know what an ICO is, it's an initial coin offering. So the crypto company, usually a startup, will issue tokens. In exchange, they bring in Bitcoin or Ethereum, and they issue, typically we've seen most of the ICOs, I think something like 80% are issued on the Ethereum platform, and they issue ERC20 tokens. And generally, the companies are in a startup phase, so they're bringing the money in to build the company, and the coins can start trading. And the interesting thing about most ICOs is they don't actually give the token holders any rights to the company. So it looks a lot like the stock market. A little different though, because it doesn't have any hours and it's international. It's not, one stock market that only sells American companies or Canadian companies or something like that. It's any companies. It's pretty global, and the volumes on it are a lot higher. The volatility too, or the volumes are not higher. Sorry, the volumes are way lower than the traditional stock market, but the volatility is a lot higher than the initial stock market. Last year, we saw some coins, doubling in a couple hours. Things like that would happen. So it's been a fun time for traders last year. This year, not so much. The prices have really dropped on a lot of ICO tokens, as well as the price of Bitcoin dropping. And then there's a big question now. So the Dow token, which is the one, it raised 168 million last summer in 2017 summer. And that was the first time that the SEC stepped in. So there was a problem with the Dow, got hacked, and everyone lost their money. And the SEC came in and said, actually, that's a security. And they looked at the Howey test to determine that. And the Howey test is whether it's an investment of money into a common enterprise with the expectation of profits based on a third party's work. So if you're giving money to this crypto company, you expect that your money is going to increase in value because of the work they do at building their platform, then that creates an investment contract. So, so companies then started really trying to become utility tokens and not security tokens, so that they would be outside of that Howey formula. So the way that people would try and do that is creating something that would bring them outside of one of the prongs, either maybe not needing an investment of money, so airdropping the tokens, or creating some kind of game atmosphere where the users are the ones that control. It's not the effort of a third party, it's the effort of the collective token holders that make the value go up. So I think it is possible in certain scenarios, but it's a tall order to try to be a utility token. And then there's also the challenge that the token holders of these utility tokens don't have any rights. Like, they don't get any dividends based on the company's earnings, and it also kind of misaligns the objective of the person who took in all the money, the company's CEO, or board of directors. Well, they're not board of directors, they're called advisors, but those people often get a lot of money, and then their motivation to create a really great product is gone, because usually you want to create a good product to get the money. But here we have the money come in, and then they might be a little more lazy now that they're millionaires, compared to struggling developers trying to become millionaires by creating something good, if that makes any sense. But it's so if you have a security token, the way to raise the money in compliance with the SEC would to be either a Regulation D, Regulation S, or Regulation crowdfunding, and you can do these in conjunction with each other. There's also a Regulation A plus that's a little bit different. It's more like an initial public offering, but the Regulation D, you limit it to accredited investors, and you have to lock all three of these options. You have to lock the tokens for a year in America. Regulation D, you can raise any amount of money, and you can advertise in any way because you're limited it to accredited investors. Regulation S is for your international investors. So you don't have to follow the full accredited standards for those, but you have to follow their own country's accredited investor or equivalent standards. And you also have to lock the tokens for a year using Regulation S. There's 3 tiers on Regulation S. So if there was no chance that the investment would flow back into America, you would only have to lock it for, there's the first tier, I believe, is 30 days, and the second tier is 4 months. But the nature of cryptocurrency, it's so likely that it will flow back into America that I think the only prudent way to do that is with the 1-year lockup. And then the Regulation crowdfunding, you have to use a registered crowdfunding portal, and you can raise up to $1 million that way, and it can be from non-accredited investors, but they have to have limits. It's like if they can only invest $2,500 if they make under $100,000 a year, and that's across any regulation crowdfunding option that they want to do. So if they want to invest in multiple ICOs that are using this regulation crowdfunding, they could do like maybe 1,000 in one, 1,000 in another, 500 in another, and it's a rolling 12-month period. And then the utility token, so if you want to avoid the SEC's rules with it, you can still do this in other jurisdictions like Estonia, Gibraltar, Sweden. A lot of places will allow you to do it, but you have to block U.S. investors if you're doing it that way, if you don't want to get in trouble with it. And And then the other option, Wyoming, has come out with state legislation that they believe in the utility token, and they allow, if your investors are from the state of Wyoming and you're not crossing state lines, then you can have a utility token that way without following the Reg D, or the SEC's kind of guidelines. So the Wyoming one is really interesting too, because they're creating a new LLC where people can basically take an e-residency in Wyoming. So this could lead to a way for the whole country to legally participate in a utility token outside of the SEC's purview, but that's to be determined. We'll see how that transpires. And there have been a few enforcement actions so far. From the SEC, they've gone after Centra and Munchie, and then there's a private action against Ripple, where I don't think that one's going to be very successful, because the person that did the lawsuit only lost something like $600, and they're trying to sue in federal court, which you need $75,000 in losses to really have standing there. So they're trying to get a class action together to say that Ripple was a security and didn't follow the securities law protocols. So we'll see if more and more people join that and they get it up to 75,000, then they might have a good case. Centra, that one was a really egregious ICO. They raised $40 million, saying that they were creating bank cards and had partnerships with Visa and MasterCard, saying that basically you'd use this debit card and it would access a crypto wallet, so you'd spend your Bitcoin just as easily as you spend your MasterCard. Like you can pay anywhere that you can with a MasterCard or Visa. But they also said they were offering dividends of 8%. They had celebrities pumping it. And they turned out they were completely frauds. Like, they had no relationship with Visa and MasterCard. They had made up fake advisors on their website, and they weren't building anything. And they actually got criminal charges against them too. So that's the civil case has been stayed, so that until they find out the criminal case, then the SEC will resume the civil case. And I think the next time they're going to be meeting on it is January 2018. So it's not happening quickly, but the two of the CEOs, or the two main guys in Centra, are in jail at the moment. And then the Munchie case, this one, they didn't raise a whole lot of money. They only raised $60,000, and it was, I think, one of the first ones that the SEC went after, kind of to set as an example for the rest of the industry. And the things that the SEC said were wrong with Munchie's offering was that they said in the white paper that they had done a Howey test analysis and they were fine. They were a utility token, but they didn't explain how they got to that conclusion. And they had various marketing material out there saying that the expected return would be huge percents, and the SEC doesn't like that. Like, you can't predict what kind of return you're going to have. It's like lying to your investors, saying we guarantee you're going to get this much return, when in fact your price could go to zero. So that was kind of one of the main problems with Munchie. So those are the current enforcement actions, and there's a lot more too. But some of them are from state-specific things. All these states got together and went after. I think one of them was Shipcoin, and there were a few others. And this is not a comprehensive list. It just shows there are some enforcement actions out there, and the Centra and Munchie are the two biggest ones from the SEC. So since then, the ICO environment hasn't actually chilled off. People have just started moving jurisdictions and not including American investors. And then what American investors are actually doing is using VPNs to make it look like their computer is located in another jurisdiction and still buying the coins that way. So yeah, all the regulations in crypto don't work as well as the government would like them to. And what's the path forward? Well, I advise a lot of tokens or ICO companies, and some of them I think are very good companies with a lot of integrity and great ideas out there. But But my own personal investment, like sometimes I'll get paid in their coins, and I certainly hold the coins, but my big holding, which isn't even that big yet, I still owe student loan money, so I'm trying to pay that off more so than buying Bitcoin. But I will keep at least 90% in Bitcoin. That's, you know, that's the main one, and it's beyond the regulatory control, and it is decentralized. Everything that everyone says is good about cryptocurrency is embodied in Bitcoin. And you can see the price chart here. You know, it started off at 10 cents and it went up to $19,000 in December, and it's dropped a lot since then, and people are saying it's going to continue dropping. But with Bitcoin, the saying, you got to hodl, like you just got to be patient with it and wait it out. And the next halving of the mining difficulty is coming up in a year and a half, and that's when those happen is often when we see price jumps. So that probably will be I can't predict the price. No one can. Some people try, but I can't say. But what I feel in my, what I think, which is not worth anything, we don't really know, but what I think is at that time the price will increase maybe to 60 to 100K. That would be nice, but who knows? And it could go to zero too. But I'm a believer, like with my own money, that it's not going to zero. And the fact that there's only going to be 21 million coins means it's got a built-in deflationary mechanism. So the opposite to the US dollar, where they just print it, and same with the ICOs, where they just create money out of thin air. Bitcoin, it's mined, and it's not created out of thin air, really. It's created by a lot of computing power. And if you've ever done a transaction with Bitcoin, you just know it's so much better than using a debit card. And it's fast. It's almost, it's very cheap. And we have some new developments coming up with it that I'm going to get into that'll keep those fees low. And if we look at Bitcoin adoption, so this chart says the adoption of technology in the United States from 1900 to present. So, things that it looks at is the telephone, the TV, video games, MP3 players, a lot of different things: cars, color TV, credit cards, internet, smartphone, digital cameras, microwaves, tablets. So Bitcoin, they're saying, is just at a very little tiny percentage, but it shows all those other technologies, they were down there at one point, and then they went up to, between 60 and 100% adoption. And I don't know where we'll get for overall Bitcoin adoption. Maybe it'll be people using it and not even know they're using it. But I think we're going to see more adoption than where we are today over the coming next couple decades. And the path forward, so there's been a lot of development on the Lightning Network and side chains, and these are because, I hope I don't botch it trying to explain it, but basically there's so many transactions that have to go into a block of Bitcoin that it makes it clunky and slow, and sometimes it can be expensive in terms of the fees. But if we move the transactions onto another network and then just have a batch of transactions going on as one transaction to the actual Bitcoin blockchain, it's supposed to make it much faster and cheaper. And a lot of work's being done on that, and people are very excited about it. So I think it's, that's supposed to be one of the scaling solutions for the future. And then we have smart contracts. So Jimmy Song, one of my Bitcoin idols, he just put out a really good article saying that these contracts are actually dumb contracts. But it's thought, or a lot of people in the community have, Ethereum kind of developed the smart contract, but you can also do it on Bitcoin. And the idea is that you program in an outcome ahead of time. So I think that there will be a place for these. They're not highly used right now, to my knowledge, but it's exciting technology to think, like, if you're doing some kind of deal, like even for me getting legal fees, if I, the way attorneys work often, if someone refers a case to me, or I refer a case to some other lawyer, usually the person making the referral gets 25% of the fee. And since cases sometimes take forever to close, it's often really difficult to collect that 25%, and you have to trust the other lawyer that they will in fact pay it. But the idea, if you do things like that using crypto and put it on a smart contract, as soon as the case would close, that 25% would automatically go to my Bitcoin wallet. So I wouldn't have to follow up and say, hey, like whatever happened with that case, and trust that they're going to tell me the truth, that either it's still pending, or it got dropped or whatever, or it's about to close and here's the expected amount. So it also can, smart contracts, basically any outcome that you want to program in, you can set it to move money to multiple places at one time upon the happening of a set event. So there could be lots of applications for this technology. And art on the blockchain, this is one that seems to be really popular, or at least in my world, I'm hearing an awful lot about it lately. I was at the Ethereal conference a couple weeks ago in New York and watched a crypto kitty auction where the crypto kitty went for $140,000. That's just a digital piece of art. And then there's the rare Pepe trading. It used to happen on the Counterparty blockchain, but the rare Pepe scientists closed it down in the last couple months. But basically, people were just creating all kinds of different images of frogs. You can see here the rare Pepe wallet. So people were buying this for rare Pepe cash, and the value of the cards, it was giving artists all over the world a platform to sell their images. And I think that's kind of exciting about Bitcoin. And there's a lot of talk about art and using the blockchain with it to make to make a chain of custody, kind of like when you sell a car. If you don't have the title of the car, you're going to assume the car is not got good title. And so the idea of putting the art attached to the blockchain, there's still some challenges with that, because the digital art, the token and the art are together, linked as one, so that the crypto kitties or the rare Pepe trading work for that. But when you have a physical piece, there's always challenges of applying it onto the blockchain. But I think it's where we're headed for art, or at least a lot of companies are trying to go there. And then that HODL art, I also saw that sell at the Ethereal auction for $12,000, just a drawing of the HODL sign by Crypto Graffiti. He's the same artist that did that United Nodes of Bitcoin on the first slide. But really interesting pieces, and people, I think, are just inspired about the technology. And there's been so many amazing artworks, digital artworks and physical, that have come out of it. And then my friend Nick did the 3 paintings at the bottom. The one of Christopher Walken is actually mine from the movie The King of New York. And then the middle one is Satoshi, and then the one on the far right is the breakup between the Bitcoin Uncensored hosts. They had a little, it was a great show where a lot of the best information in the early days of Bitcoin was coming out from them, and then something happened and they stopped doing the show together, and everyone was very upset by that. And so Nick recently made that piece, and it was commissioned by someone, but it went into almost a bidding war, and everyone wanted it. So it was the art and the blockchain is just kind of a fun area for it. But also, it has made a lot of people quite a bit of money over the last couple of years too. And then we have real estate in the blockchain, and I was recently asked to do a presentation on this topic for the Florida real estate attorneys, and they had a lot of questions about it too. But it gave me a chance to do a deep dive on the sector of the space. And there's a lot of companies working on doing it. The Cook County in Chicago actually put real estate and the blockchain together a couple years. Well, I think it was in 2016 that they started doing it. So they're recording all real estate transactions on the blockchain, as well as giving people paper deeds for it. And the idea is they're going to build a really better way to do title searches over time. And then there's Proppy, that's the little blue symbol. They're creating a way to do the whole start to finish transaction on the blockchain. And then Silva Porto Capital, they've come up with a way to do real estate investment trusts broken down using cryptocurrency. And Jet Closing has started implementing the blockchain into their closing procedure, and Ubiquity is creating title records for any kind of, they do real estate around the world, and also other physical items that need titles. And the idea is, in America, we keep our real estate records offline, segregated by county. So there can be a lot of mistakes in the title search, and that's what title insurance is for. And MLS data is often really fragmented and not up to date. So if people were using the blockchain for this, we could have a much better system for searching titles and seeing chain of custody, and also just seeing what's on the market. If they were using blockchain, every sale would be recorded up to date. And, the idea is the blockchain should be very trustworthy. And in terms of the path forward, like I said earlier, my own strategy is just holding at least 90% of my crypto portfolio in Bitcoin. That's where my, true belief still falls. But it's exciting seeing all the developments that everyone's coming up with. And when you go to these conferences, it's, thousands of people that are just working on developing with this technology. So who knows where we're going to be, 5-10 years out from now, what society is going to look like. But I certainly think Bitcoin's a very disruptive technology that we have here, and can make the whole world run smoother, especially places where you don't have access to a bank account. And all you need is your phone, and you've got your own bank now. So it's exciting. Thank you.